Hello everybody and welcome to another amazing video of DIY investing. This is now going to be my 7th year in crypto and going into my 3rd bull run. Throughout the 7 years, I have learned a lot inside of these markets, and every single bull run, although different, has a lot of similarities. Today is a great opportunity to go back in, look at every single one of our prior cycles, looking at the time frames, looking at the price action, analyzing exact levels, and then talking about how maybe this cycle is lining up or if it's maybe a little bit different. But if it ends up playing out in a similar way as the last cycles, how can we ultimately capitalize on making the most profit over the entire bull run? Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, now here we are to start off today's video, and we're going to be mapping each and every cycle. We're also going to be talking a little bit about altcoins, analyzing the cycles around Ethereum against its Bitcoin pair, because this cycle itself is so much different than anything that we've seen to begin a new bull run. We're seeing altcoins that are actually holding up better. We're seeing altcoins outperform Bitcoin in a lot of different ways, and we're seeing a lot of different adoption that we didn't really see in many of the other cycles. And I think that all of this is important, which is why I wanted to kind of factor in what all of this means, everything that we're seeing right now, and how can we ultimately make the most profit off of it when the market starts to take off. Now, you guys know that the comparison that I've been making around this current cycle has been around the 2019 cycle. And the reason I've been drawing it around this 2019 cycle is because of the parabolic advance that we saw. In 2019, we built this 3-month foundation after the bottom of our capitulation, and we spent 3 months rounding out before building our first impulse into the new cycle. And we went through 3 different phases. We really had, well, I'd say 4. We had the accumulation, and then inside of the impulse, we went through these 3 levels where we kind of began the breakout right here. We ran up. This was our first real breakout, and in this breakout, this is where we actually flipped above this massive $6,000 to $7,000 resistance level. That was the most important level on our entire chart. And so when we flipped it right here, that's what led us to this final blow off top, and this was the biggest impulse that we had ever seen to begin a new Bitcoin cycle. And the reason I've kind of drawn it and compared it to this cycle is because the way that our current cycle looks up to this point is very, very similar as far as just the basic price action. Every cycle is going to be different, and so we can't just assume that it's 100% going to continue to follow in the exact same ways. We could see a deeper correction that goes down to this 25K level again before we're actually done with this correction. We don't have any sort of guaranteed direction that the market's going to take, but what I will say is up to this point, because of the foundation that we have built, it looks very similar. And what I've continued to tell you guys has been this first breakout right here, and then this consolidation here being the exact same as our current consolidation, being the breakout here and being our consolidation here. And I still think that each one of these are very similar, and that's ultimately what's going to lead us into this final blow off top. Now, inside of this, the reason why I think that this is going to behave in a similar way has a lot to do with this 25K level. Now, I think that this is the most important level on the entire chart. And even though we're taking a lot of time chopping around after flipping this level, even though we're taking all this extra time to try to confirm the direction the market's going to go, I still believe that because we have flipped this 25K level and we are sitting on top of that as support, I believe we will ultimately see one final parabolic move to finish this impulse. And that's why I think this 25K level is so important, is because we spent so much time consolidating here. The difference between, you know, the cycle in 2018 and 2019 versus the one that we're seeing today, you know, Bitcoin had this 80% correction, and then we sat and went sideways for a solid 3 months. In our most recent consolidation, we were doing things a lot differently. I would say that we had our first real capitulation here in the middle part of the summer, and when we bottomed here in June, you know, we spent 6 months, or what I should say, about 4 months going sideways right here, ultimately before falling to one final low being the FTX collapse. Now, in our last cycle, we didn't really have that same type of price action. In the last cycle, it was very steady, consistent downtrends. We did spend a lot of time consolidating on this 6K support floor. So I think that it's similar as far as the way that our price action is looking, but there is a lot of differences. And this is why it's so important that we're looking at each and every cycle, because we don't truly know what's going to happen. We don't know how each one is going to vary moving forward into each and every new cycle. But the thing that I want you guys to remember, in the same way that when we rallied up and we broke out of this massive consolidation, because keep in mind, guys, this was a huge bearish consolidation pattern, a massive descending triangle that we sat here. And I remember watching so many people as we made this first breakout and we were sitting just below resistance that were drawing that, if we did see a higher high, it would be short-lived and then we'd come all the way back down and we'd have to go through a lot longer period of consolidation. And people were drawing this and really comparing it to what we saw in 2015, how we spent 280 days going sideways. And that obviously wasn't the case. After this first breakout, we saw an even bigger one, and we went way above this resistance level. We cleared 5, 6, 7,000 and rallied all the way up to 9K before flipping it as support, and then that's what led us into that final blow off top. Now, there's a lot of differences here in between these cycles, but the similarity is the level that once we flipped this 6K, 7K range, and we held it as support right here, that's what led us to that blow off top. And in my opinion, this 25K level and how we've just broken out of it and we're now consolidating above it, in my opinion, it's going to act in a similar way. Now, not only does this 25K level kind of line up with our bear market bottom and this entire consolidation that we've been in, but we also have this range up here at a little bit higher, being around $29,000 to $30,000. And inside of this range, this is going to be the important level where we're either going to start that next leg up into the cycle, where we're going to start, in my opinion, more of a blow off top scenario like what we saw over in here, or we're going to end up falling back down and continuing this consolidation. But the big thing here is the fact that we have this massive consolidation range, and right now it's resistance, right? We're ping-ponging in between 25K support and then this 29K resistance. But once this level is flipped, and we truly have support found in here, wherever that's going to be, whether that's us capitulating and having us make one final low, or whether we kind of find support where we're at right now and then break out like this. Either way, I believe that the next impulse coming is going to be that type of a blow off top move. And everything is kind of riding around this 29K to 25K level. We have 25K. This was the resistance in our bear market bottom, right? The entire consolidation that we spent in here, we were unable to get above the August highs for a long period of time. We spent 270 days in here. Finally, when we broke out of that, we even rallied all the way up to just under $31,000 before starting our pullback. And so I believe that this entire range here, basically from 29K, even though we went up a little higher, from 29K to 25K, I believe is really the important level where we're going to dictate if this is support. That's going to be where we send into a new high. If ultimately this is unable to hold, I believe that would signal a multi-month correction. And it's really important that we get above this level if we are to see this final blow off top. But guys, I still am leaning towards this being bullish, even though we are seeing further consolidation. We are seeing a little bit of a deeper dip inside of here in the shorter time frames. I'm still leaning towards this 25K level holding. And I think that that's an important level to hold, considering the fact we spent so much time underneath it. For us to finally get a strong impulse outside of that, we cleared this range by a significant margin here. For us to take all this time consolidating back down on top of it, I believe it's going to hold. That's my personal belief. We can come out here and look on the bigger time frames, remove our drawing tools. Let's look at it on the monthly time frame. And we can see that I believe even if we come back down and retest this level on the monthly, and we come all the way back down and make a lower low, I still believe that this is ultimately going to hold. And it's going to send us into that next leg up. There's always really our first major breakout to begin each and every cycle. And now we're going to take some time to actually go through each and every cycle. Because if we're going all the way back to this one, in my opinion, we saw kind of the same turn of events in every single one of our bull runs and bear markets, really. Where when we start our new bull market, we have this very important level that we have to clear. And once we've cleared that level, that's really what sets in motion the bigger impulses to come. And we can see going back into 2015, we had this level and it was kind of acting as support inside of our bear market. Eventually it led to our final capitulation. In capitulation, we spent 280 days, ultimately consolidating below this resistance. And then when we actually made our first breakout into the new bull market, we can see that we broke out, We made this convincing breakout to the upside, and then we actually consolidated on top of that level as support. So every single bull run, there's an important level of resistance as well as support that once cleared, in my opinion, really sets in the motion for the bigger impulses, for continuation of the bigger trend to follow. And we can see that across the board every single one of our cycles. Now inside of this cycle, we didn't make the same amount of attempts at rejecting off of a resistance or bouncing off of support because we didn't have as much liquidity in the market back here. But it's still kind of the same thing. We had an important support or resistance level inside of our bear market, inside of the bottom of our capitulation. This was kind of the same level that we ended up dead cat bouncing upwards to before, finishing out this consolidation sideways. But we can see that this is once again that important level of consolidation, right? Where we have the bear market, where we have our bear market low down in here, we make our first impulse, but this top of the resistance ends up being the same level that we reacted to inside of our bear market consolidation. Eventually, when we break out of that, we can see that we flip it as support, and then that's really what sets in the greater part of that cycle. And I think it's important that we're factoring in this because inside of our current cycle, we have flipped another key level in the same sort of way. Now, the only real difference here is our 2019 cycle, and that's why I think that it's important that we compare what we're seeing today to 2019, as well as looking at prior cycles, because there's always a very, very key level of resistance or support. In this case, it was basically $5,800 in the 2019 and 2018 cycle, where we spent all of this time consolidating off of this level. We started breaking back out and we were below this, but eventually when we broke back above and we held this as support, that was really the point where we got our confirmation that the new cycle had started. Even though we saw this COVID black swan, the temporary peak below, we ended up seeing us instantly reclaim that same level as support. And we can see that every single time we get an important level of consolidation, it's happening either right above this 6K range, right below the 6K range, or right on top of that 6K range. There's always a very key area of support or resistance that we have to follow to understand the direction that the market is going to take. And so now when we're factoring all of what I just said into what we're seeing today, in my opinion, this important level is going to be this 25K or upwards of about $29,000 in the range that we're literally sitting in right now, in that same sort of way that we broke out of 6K, went all the way to 9K and kind of headed as support, then went to our blow off top. I believe that as long as this holds as support, as long as this ends up holding right here, even if we see, a retest of 25K again, regardless, as long as this holds, I believe this is setting up for a very, very quick and strong impulse. And so anybody that's prepared beforehand is ultimately going to be able to capitalize on that. The problem I see right now, and the reason I wanted to make this video, is I see a lot of people that are really worried right now, that are trying to take a lot of profit, that are trying to get out of the market and trying to trade too much. For me, I'm much more focused on holding because I know that we're at the early part of the cycle. With us being at this 25K and 29K level, if we were to top right here and then us to start making a deeper correction back down and have to start over the whole thing, I'm more confident holding here because if this finds support and we see this big blow off top, in my opinion, it'll be much easier to know when to take profit inside of that move. I would rather, with this only being around 30K, I would rather hold, continue to dollar cost average what I have than look to take too many long-term profits because I still believe that the bulk of this move is still waiting to be completed. And so now one final thought right here is actually the Ethereum against Bitcoin, because this is really what's going to dictate how big of a move that altcoins are going to have. And one of the really interesting things that I find so fascinating about this cycle is the fact that our entire bear market for Ethereum, as well as Bitcoin for that matter, but our entire bear market that happened, Ethereum continued to maintain higher highs and higher lows against Bitcoin. We've never seen that before. There's never once been an altcoin that has done that to begin a new cycle unless it was a brand new altcoin that had never had prior cycles. For Ethereum to be the driver of value inside of the altcoin market, for it to be the staple of altcoins, and to see this thing only maintain higher highs and higher lows all the way throughout this consolidation, I firmly believe that this thing is getting ready to break out in a very big way. And anybody that's holding or positioned beforehand is going to be able to capitalize on that type of a move. Now, the reason why I feel confident in holding right here, and the reason why I'm continuing to lean towards this making one final impulse, is because when we're looking at this, Ethereum has spent all of this time inside of this consolidation range. And I believe that the next move coming for Ethereum is going to be a breakout. So it would make sense that if we're going to see Ethereum kind of break out of this entire range that we've been in since May of 2021, that it would happen around the point where we end up seeing a blow off top in the completion of our very first impulse to begin the new cycle, because oftentimes that's what we're going to see inside of a new cycle. Now, this is the things that we're going to be factoring in, but I think another thing that we should be factoring in also is the 4-year cycles, because there's no more accurate form of analysis out there than 4-year cycles. There's no better way to know when to get in and out of the market and know when to get out of the market than the 4-year cycles. And we can see this based off of, all of these prior cycles lining up and syncing up so accordingly. Now, 4 years equals 1,450 days. So if you're going to notice here, from 2011 to 2015, this one was only 3.16 years. So it wasn't all the way a 4-year cycle, but it was pretty close to being an entire 4-year cycle. And the reason I believe it wasn't is just simply because there wasn't very much liquidity back here. But if you guys notice that once we hit 2015, and then we go another 4 years in advance, we can see that each bear market bottom is lining up to be 4 years. The last 2 bear markets of the last 8 years have been 3.91 years in duration. And so I would love for anybody to go out there and find me a more accurate form of analysis than something that can pinpoint every single market bottom to the almost exact decimal place. We're only 0.09 decimal places off from being an exact 4 years. And I think that is, a very big thing that we need to pay attention for, because there's really been no other form of analysis that I've seen that has played out this accordingly. Now, in the same way that we got this data point in 2018, we got our secondary data point here after the FTX collapse. And if you guys notice, that the same exact distance from our bear market bottom in 2015 to the bear market in 2018 is also the exact same distance from the 2018 bear market to the 2022 bear market bottom that we just went through, being the FTX collapse. So if you're looking in here and you're noticing a very obvious pattern, that's why I'm telling you guys that we should probably stick to this, because I don't find a more accurate form of analysis inside of the markets. People are going to hate on 4-year cycles, but the people hating on 4-year cycles are just oblivious to a very obvious 10-year trend that's in play. And I don't think that we should, doubt this or move on to anything, because we've continued to play out exactly up to this point. Now, because we've started this new cycle and because we got our secondary data point, we can see that every single one of our bull markets has behaved different, and some have behaved a little bit more similarly. If we're looking back at our first 2 bull markets, being 2011 and 2012, and then also looking over here into 2017, we see a lot of the same similarities between the beginning of the cycle, where after our bear market bottom, we get the data point here, and then we start these 2 impulses, and it's more or less just the first 2 higher highs and higher lows of the new trend. And then that's what leads us to the blow off top and price discovery, right? Now, what's interesting here is we saw the same kind of way that these cycles played out in 2011 and 2012, as well as 2015, 2016, and 2017. Now, when we're getting into 2019, this is where things got a little bit different. We ended up seeing more of a parabolic advance, where we make this kind of echo bubble, where all of the other ones were just short impulses, higher highs and higher lows. This one in and of itself almost made a little parabolic rally to begin the cycle, and that was this move right here, this 2019 type of parabolic advance. We had never seen quite this type of a move off of our support lows. And that's why I think it's important that we're factoring in what we're seeing today, because when we're looking at things from the bare bones, from the real basics, this consolidation to me looks a lot more like this consolidation. It doesn't so much look like what we saw in 2016. It really doesn't look like what we saw in 2011 or 2012 either. And that's why I believe that we're either inside of a 2019 type of echo fractal, or we're in some type of a variance between the two. And so for me, I think that as long as we're holding above 25K, this is going to create a 2019 type of move, with us ultimately completing this blow off top right here. I believe that would be this move, and then we'd probably start, a multi-month consolidation like this, right? That's kind of what I'm leaning to, because the thing of the matter that we need to really be focusing in on is how much time it's taken for us to actually make an all-time high, top at the all-time high, go through an entire bear market, and then break that all-time high again. And we can see that from this cycle in 2011, from the top to the point of us breaking all-time highs again was about 630 days. Keep in mind that was a shortened cycle based off of time. If we're looking at the top of 2013, from the point of us breaking out again, we're looking at about 1,250 days. So that was a long time that we spent before we ever broke out and made a new all-time high. Now, if we're looking at what we saw in 2018, it took, relatively about the same time. It was about 1,100 days from the top to the point of us actually making another new all-time high. So we have to be remembering to be patient here. We have to remember that no market cycle has ever just instantly started breaking out and just going into new all-time highs. Even though 2019 got close to doing that, we still had to go through 450 days worth of a short-term bearish correction before we ever made the next impulse again. And so because we topped in 2018, or what I should say, because we topped at the end of 2021, if we're looking at 1,100 days, we're looking at the end of 2024 before we're at the point of breaking out and going into new all-time highs again. And so I want you guys to be aware of this, because now starts the patient game. We've been accumulating, we've now, in my opinion, exited the bear market bottom. We're sitting in between this range. If we are to hold this as support, I believe a large impulse is coming. And that's kind of the way that I'm leaning towards things. Even though things are a little bit more volatile in the shorter time frames, we can obviously tell that we ended up making a deeper pullback. What I was kind of watching for was for us to hold this mid-range point. We can obviously tell that we didn't. We rejected and then fell lower. But the rejection right here could turn to be a reversal. This could be a diamond reversal pattern, right? So this could be a diamond reversal where if we break up, reclaim this level, in my opinion, we could easily start that next leg up back up to $29,000. We don't have any true sort of confirmation yet. We did see a deeper pullback than I was initially anticipating in the shorter time frames. But at the end of the day, what we're really focused on here is the range lows being this level at about $26.5 thousand. And we are above that. And so even though we're seeing a little bit of a deeper pullback, in my opinion, this does invalidate the double bottom formation that I was watching. We would have needed to see the double bottom hold up here, but because we dropped back down into that support, this has to just be its own set of impulse, and it could be something like that before we make that leg up. But I don't know 100% what this is. All I know is that as long as we're holding above, 26.5, I think that we could see continuation. If we start to see weakness and we go below that, I think that this is ultimately going to resolve in a deeper correction to the downside. But regardless, guys, I still think that we're going to be bullish. I'm still leaning bullish. We are sitting on support of the range lows. That to me is a bullish sign. So that's what my plan is. I'm going to continue to stick to that. Wanted to give you guys this update just so that you guys knew exactly what I'm thinking. Want to talk about a lot of different things because there's a lot of things to factor into this next cycle. I know that we're going to be profitable. I know that there's a highly profitable cycle at play right now. And, for me, this is my third cycle. I just want to be able to teach you guys all of those lessons that I've learned. And this is ultimately what I've learned. I hope that you guys were able to find some value in this. If you did, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these videos. If you guys want to join the Discord server, download my free ebook. Links are in the description for that. You guys can also sign up and follow all the trades that I take if you guys go ahead and join on my website. Thank you all so much for the support. With that being said, I'll catch you in the next one. As always,